Welcome back, guys. It's Jason with your Hopium-free crypto and economic market cycles update. As we lead into the peak of 2026, things will heat up. But 2021, not looking so good at this point in time. Probably a shaky first half of the year. And will Bitcoin and cryptos survive another drop? Let's look at that in today's market update for crypto and some of the economic news. All right, make sure you've smashed the like button. 10% did it last time. Thank you very much. Let's see if we can get it to 12%. Hit that on your phones, on your computers, on your TVs, whatever it may be. Smash the subscribes and the bell notification icon so you can see the updates as they come through. Nearly on our way to 260,000 subscribers. All right, so the market cap update, which we'll cover in the charts as well, because we tend to look at the total market caps. It's important to check that out. 2.07 trillion. We're just falling short of that at this point in time. Bitcoin, 43K. Didn't get to our 46K level. We've upped that from 45.5 to 46 for what's $500 between friends. 46K is our level now because we have to adjust those due to the 50% level, which I'll show you on the charts. And Ethereum 3,300 also bounced off that low. BNB bouncing off the low. ADA, the biggest surprise here, $1.50. Remember our target 160. Solana struggling a little here, but at least ADA, we can rejoice. We've hit number 5 again. But the main thing is, in the last 7 days, up about 27%. Let's see if we can get to $1.60. If you guys want to learn more about the markets and becoming financially literate and financially free, check out our Patreon. The link is in the top of the description. Once a week, we do market reports on portfolio, on the investment cycle, and of course, the majors in cryptocurrency, property, and metals. So check it out down below. 2 months free if you sign up annually. Now, the first piece I want to cover is China. We've seen a lot of bad news come out about China and Evergrande, which is their property developers in China. But they've been bailed out before. So whatever goes down next, I think investors will assume that they may be bailed out as well, provided the cycle is still up. And we're looking like we're still up into about 2026. Now, I say that because there's still a lot of bullish movement going into the markets. There's still a lot of money on the sidelines. We won't get into that in today's video, but we will be covering it on the channel as the cycle progresses. Today is China post record trade surplus in December and 2021. Now, of course, this was a couple of days ago, but the point is that trade is still increasing, and that is part of the second half of the real estate cycle. So there's still a lot more money floating around. These things take a lot longer, and as crypto investors, we tend to focus on the short term, the daily, the hourly, short stuff like that, and we forget to look at the bigger picture. The bigger picture is there's still a lot of money coming in here, and the trade surplus between China and the US is still widening, which just means that the US is still importing more from China at this point in time. Now, over to the Shanghai Index, Shanghai Composite Index. You can see this as SH Comp if you want to look it up. People still believe China is going down. That, if you take out a chart, and this is their stock exchange, that is clearly up. Sure, we had a huge boom in 2007 from 2006, then a very, very big crash. We got a higher low into 2013. We had another boom into 2015. Yes, we had another crash, a higher low from the previous low, and you can see this pattern continue to play out. This is a very long-term chart. When we're looking at the bad news, or at least the news is telling us about the bad news, they are showing us on a daily practice. And you can see that this is probably going to turn down a little bit in the short term, but the overall picture is pretty well up. And I can still see some resistance at the 50% level. So provided we get over the 3,800 level, China is going to absolutely go to town. And from this point, ascending triangle. Sure, it can break down, but I think we might get some move to the upside, at least over the 12 to 24 month period. So I'm looking very long term here. If I was looking at this chart with crypto, I definitely would not be bearish, regardless of what the news is telling me. This looks to me like a bullish long-term chart. Speaking of charts, let's continue on with those. Let's look at the total market cap. Looks like the death cross is potentially coming in here for the total market cap, but that has happened for Bitcoin, and we'll have a look at that as well. Remember our target here, 2.07. The market has just fallen underneath that again. So it's been attempting to push above the 50% level, and the next one is around 2.17. So we're still not there yet. That would be the next stage to at least regain and get that energy back into the market. But I think while we're here, we could potentially fall a little lower again and test the lows. The market has to get above these highs of 2.12 and then the 50% of 2.17. So there's a lot of overhead resistance. So if we can't get above those levels, I don't think we will survive this point in time. And I think we will fall lower, possibly take out some of these major lows and fall back into an accumulation period between the major lows that we saw come in May, June, July, and the current support levels around that 1.8 trillion. So if we can't flip above these areas now, probably in the next few days to weeks, then we'll probably drop into this zone. And this will be the same thing across for Bitcoin and Ethereum as well. So it just comes down to reward risk. How do you play that in your portfolio? If we don't get down there and we shoot up, do you have enough in your portfolios to ride that wave up and not feel bad about missing out on the drop? But if the market drops into this lower area, do you have enough capital on the side to buy up a little more and then have the patience to wait for this next stage to play out? So to Bitcoin, and I've posted this on Twitter, so check out the official links in the description down below if you want to follow me on Twitter and Instagram. I've got some Q&As going on over on Instagram, so check that out. Use the official links so you're not getting scammed out there. I only have one account of each and I'm not DMing you, all right? People are getting sucked in still. All right, check out the links. Let's have a look. Bitcoin at these levels, 46K, 49, 52, 54. These are the main ones I'm looking for. 52 because it's above the previous highs. So Bitcoin 52, that is these levels right here. And at the moment, will it survive? We haven't seen a solid bounce from Bitcoin at this point in time. So unless we get above at least this bar here on the 5th, so it's at around $47,000. Obviously 46 is the lows, that bar's 47, and then the resistance is at 49. There's a lot of levels coming into play here. Just looking at Bitcoin on the daily here, we haven't seen much since the 10th. We had 2 days up, then a reversal, and the market's been sideways for about 4 or so days. It bounced off its 50%, fantastic news, but we just haven't seen it break through that 44.5K. Of course, the next resistance is at 46, which we've talked about, and then the top at 47, and then the 49. So I'm calling almost every single $1,000 level because there is so much overhead resistance. We need to break through those. The major one I'm looking at is the 52, which I've talked about many, many times before. And of course, the 50% level at 49. So these ones are the intermediate short-term stuff to at least get us back into an accumulation above these previous lows. So while we hang out down here, there's more possibility of us falling into the next zone, which is between that 28 and about $40,000. So if we don't get the move up, then Bitcoin probably won't survive this push up. And I think we'll probably drop into this over the coming days to weeks. I don't think over the coming hours, but definitely over the days to weeks if we don't see much happen from this point. Let's look at the hopium case, the best case scenario. If we don't break down from that low and we continue to go sideways into a consolidation, we'll see that on the chart and we'll be able to have some confirmation as the market breaks above those highs. So basically, if it doesn't break down from this point but goes sideways, ideally, we just want to see it go sideways and then break those highs after the accumulation is finished. Before we jump into the cryptos, a message from our sponsor. A quick shout out to our sponsor today, which is Cyber, and they're a Web3 competitor to Google. So basically a decentralized search engine is what they're building here. As you can see from the website, it doesn't give us too much at this point, except there will be an airdrop coming up. You can see there's Cosmos here, and also if you're a holder of Ethereum. So more details to come with this. From their website, we can see a comparison of Cyber to Google. As we said earlier, Cyber's going for a Web3 and Google is Web 2. Remember to do your research and check out the link in the top of the description if this sounds like something interesting to you. A few other differences here. Privacy, impossible for Google. Possible 2024. So that's what they're aiming towards. Censorship, of course, we know that with Google. And as for Cyber, then that's what they're aiming for. No censorship. Ads beneficiary. We know all the money goes to Google here. Creators looking to get the ad revenue when it comes to Cyber. Cyber is planning to be one of the largest airdrops on the ETH network. So make sure you check out the link in the description if you want to be involved in the airdrop. The claims need to get to 100,000 before people will get airdrops. So check out the link in the top of the description. Now onto the cryptos and whether they'll survive if we don't get this push up. Let's look at Ethereum first. The 50% level is something beautiful. It is getting above that at this point. Still no more follow through. And if we're looking at an equivalent level to what we saw on Bitcoin, then around the $3,700, $3,800 level is what we want to see Ethereum break above. At the moment, sitting just above 3,300, which is the uptrend level. So you can see the bull market run here from the lows of 17 to 48. Halfway is about 33. So we're just sitting above those at the moment, but there's really not too much volume coming into the market, especially where we are. Good news is we did bounce higher, much higher than where we were for Bitcoin at that September low. So you can see here on the Bitcoin chart, you can see we basically came back to that low, double bottom, but we have not bounced from that. So for ETH, we're a little higher. That's a little stronger. And if we do break down from these levels, then we're looking between the $1,700 and $2,800 level for further reaccumulation. ADA has given us some positive signs from the low on the 10th to where we currently sit, 40% up. That's been something beautiful for ADA, which hasn't happened in quite some time. Yesterday's volume is pretty good, breaking through some of these levels. The major test here, as I pointed out on Twitter just a few moments ago, $1.60. We've been looking at $1.60 for some time because it's the 50% level of the major range, the entire bull market. So from those 2-cent lows to the all-time highs, the $1.60 level is the major 50% level. You can see we got rejected from it once. That was basically just after the Sunday swap news. So we dropped to some lows, got rejected, came back down, but we haven't dropped too far. So that's the positive sign. The downtrend, that's also the next level as well. So there's going to be a lot of resistance coming up around that $1.60 level. We slice through that. That is excellent news for ADA price increasing. But if we don't slice through it, it could take some more time. ADA against the Bitcoin and ETH pairs is also looking good. We'll do another ADA update later in the week. If you like the sound of that, for the ADA guys, like the video down below. Subscribe to the channel as well, bell notification icon. Let's dive into the last one here, and that's DOT. So this was when a lot of people were asking about buying DOT at the top. I remember because the messages come through. Should I be buying DOT now? Big breakout bar, big volume. Everyone's asking about DOT at the top. We're currently at these lower levels, not getting too much bounce, getting a little bit rejected here by the 50% levels, but we have broken the downtrend, which is the orange line here. So I'm connecting to the highs. We've just broken that. From this point, if we see the market fall, break the lows, probably end up in this purple box, but at least we've slowed the bleed from the downtrend. Ideally, for the low risk, high reward is to buy above $33 because they're the 50% levels. $29, $33, the upper side of those. This is the high risk, high reward. If you're buying in the teens or the 20s, there is a possibility of it going down, but you'll have those bigger potentials to the upside. The thing you got to remember is your money better spent elsewhere? That comes down to the individual investor and their portfolios. I've just labeled it here on the chart, which is how I view the market. Do I want to wait and buy above these levels? And I say that's lower risk because it's gotten past a lot of the resistance levels. And I still get that higher reward side. I'm getting in at $33 or so. Is there much more to the upside? We'll see. But if I'm at these lower levels, then I get bigger multiples. But the risk is it goes further. So individual, it's up to your own portfolio. A reminder, our free newsletter is coming out this week. Stocks, crypto, metals, property, top of the description. Check that out. I'll see you guys over in Patreon or at the next video. Until then, have more fun to get more done.